Hello, everyone. Can you hear me all right? Great. Well, first off, Ryan, thank you for that great intro, and thank you for arranging this event. Really been looking forward to speaking about this with all of you today. And, I think it's quite appropriate that we're doing it here in Silicon Valley, because this is, after all, the birthplace of the semiconductor. And since then, we have seen how the world has changed. As the number of transistors on a chip gets smaller, the changes in our world get far bigger. It seems therefore appropriate that one of the thematic investment themes that we're going to be talking about today is not just technology, but more specifically, semiconductors, the change it's driving in AI, as well as the computing power of, quantum computing. And the reason why I wanted to discuss geopolitics in this context is because I believe that given the thematic trends we are seeing in these three areas that I mentioned, that we are likely to see geopolitics amplify. In my view, to summarize in my sort of investment thesis or thesis around these trends is, the investment thesis around this is that where we see an intersection with geopolitics and thematic investment trends is where we see both upside risks to volatility as well as potential gains to one's portfolio. This group is appropriately named Focus on Risk, so we wouldn't be doing a good job if we didn't focus on the risks as well as the opportunities. With that in mind, in terms of the technological changes we're seeing, the rate creation of so-called GPTs, or general purpose technologies, has collapsed. And these are creations such as the wheel, electricity, the internal combustion engine, all of these changes that have had radical impacts on our society across industries and sectors. We're seeing that now collapse, and the technological breakthroughs we are now witnessing are accelerating that change. What thematic investing does is it allows you essentially to position your portfolio to anticipate changes in innovation that are either misunderstood or mispriced, and then position yourself at inflection points in growth. More specifically, I'll be talking about these potential positions in AI, semiconductors, quantum computing, sort of in that one theme of technology, as well as energy, vis-a-vis the energy transition, and defense contracting. Where geopolitics comes into this is that I believe that given the current geopolitical climate, it will accelerate a lot of the changes that we are seeing in these key industries with a long-term time horizon. Now, it should note that before we continue with this, I may mention individual stocks. That's not necessarily an endorsement of that stock. I'm not licensed to be giving professional advice. This is merely my macroeconomic research and my forecasts of where I believe there may be upside volatility as well as upside potential gains. For that, we're going to have to go back a little bit in history. Now, I promise I won't pull a Tucker Carlson, Vladimir Putin interview and go back to the year 800. I promise to keep this a little bit more brief. Post-91, we saw the collapse of the USSR. This was America's unipolar moment. Democracy, liberal capitalism had won, and there was no system that could possibly oppose it, and that this was going to spread to everywhere around the world. And if this sounds a little utopian, it's because it was. And it was foolish to think back then, even that when that was the intellectual consensus, that was going to be the case. Now, though, geopolitics do matter. They didn't matter for a long time, and if they did, it only really applied to emerging market economies that were still developing their economic, political, financial infrastructure. Now, though, geopolitical risks are not just confined to emerging market economies, but developed ones as well, as we've seen with the most recent election cycles, not just in the US, but also in Europe. Part of that change means we are living in a multipolar world, and what that means is standardization is beginning to collapse. You're seeing greater fragmentation. China's entry into the WTO in the early 2000s not only revolutionized that country's growth individually, but it also changed the trajectory of the world because it became a central node in manufacturing and supply chains, which we will see later carry tremendous geopolitical implications that we're dealing with now. Furthermore, countries like India, with a booming population, are expected to overtake the US in the year 2075. This is, of course, only one estimate, but the forecasts look promising. The point is, we have many actors now besides the US that exert tremendous geoeconomic, geopolitical, and geofinancial power that the US can no longer simply ignore. With that comes increased political volatility that we then see exerted in markets across asset classes. Really, where we began to see a lot of these changes from the era of globalization and hyper-interconnectedness really stem from about 2008. We obviously had the Great Recession, the financial collapse that precipitated it. And then from that, we saw a political fallout. We saw the rise of the Occupy Wall Street movement. We saw tremendous social unrest. We saw a disillusionment with what global capitalism was supposed to deliver. Now, if this seems ephemeral or rather nebulous, it's not, because it clearly translated into policies. Fast forward 8 years later, and we get to the election of Donald Trump, with a clear ideological differentiation from the predecessors. This isn't a moral endorsement or indictment of a particular set of policies, but rather an observation of a series of trends. It's not a coincidence then that same year we also had Brexit. Studying in London during that time was definitely fun. We also then saw increased Euroscepticism all over the European Union that exerted quantifiable pressure on bond markets and the euro and all the other currencies like the Swiss franc that still circulate on that continent. Most famously with Trump, one of the policies we saw were trade wars. And we saw specifically a more direct confrontation with China, one that we sort of had danced around despite there being ideological differences. But the trade war wasn't just confined to an adversary, it also extended to our allies. Again, another example of a geopolitical change in our climate having tangible impacts macroeconomically and financially. And then from that, we also saw trade wars happening in emerging markets, most of which are key commodity suppliers and vendors to the three powerhouse economies in the world, the US, EU, and China. And it may be tempting to write all of this off as the anomaly of one candidate or a few parties in some countries in Europe, but it's not. We're seeing it's part of a broader secular change. And this is where the investment themes come in. Fundamentally, the premise that I'm operating around, and the data seems to support this, is that we are seeing security take precedent over interconnectedness in a multipolar environment. And that has multi-iterated consequences, not just economically, but geopolitically as well. And here's an example. We see the Biden administration and the Trump administration, which clearly seem different on paper. And yet, a lot of the policies seem to be the same. One example, the tariffs. The tariffs are still in place. Mr. Biden hasn't repealed them. And it's not an indictment on him, but it's merely an observation that there seems to be now a tougher stance on China political secularism that remains immune to hyperpolarization that plagues most other red button hot issues. With that in mind, in my view, the confluence of all these factors leads me to the conclusion that as geopolitical security takes precedent over hyper-economic integration, we are going to see key industries like defense, technology, and energy get supported by government-backed capital, and we'll be seeing that across a whole number of spheres. If you look at the CHIPS Act in the US, or the Inflation Reduction Act, or Europe's echo of a lot of these policies through their own CHIPS Act. It's not something that's regionally isolated. It's something that crosses borders of all shapes and size. And this is where there may be geopolitical alpha, so to speak, to quote the title of Marko Popic's book, where investment in these industries, specifically ones in the geopolitical crosshairs of all these changes, may see upside risks, both in volatility and in performance. With that, it seems appropriate to start with the US because that's the one I've been talking about the most, and it's most appropriate to start with our first theme, which is defense. The Biden administration recently signed the largest defense bill in history at $886 billion. And what's interesting is that the NDAA, the National Defense Authorization Act, has been signed for passed for 63 years straight. Meaning that despite the hyperpolarization that we have most recently seen, it seems that there is a unified front on defense contract spending, implying that there seems to be a political secularism there and an encouragement for those with exposure to that sector. Now, most defense contracting companies have the US as their largest client, which from a business perspective might seem uneasy, which means if your one client leaves, then your business is kaput. But with the US, as the world's reserve currency holder, there is tremendous flexibility offered in how our budgets are allocated and the rate at which we increase our defense spending budget. And tension with China has played a key role in this. I believe it's the Pentagon's Indo-Pacific Command has recently increased their budget allocations $4 billion more to $15.3 billion. The Pacific Deterrence Initiative now has a fund, I believe, that increased 40% to now $9.1 billion. It's not then a coincidence then that you see increased military spending, and then you're also seeing those funds being diverted to a key region that is increasingly a hegemonic, or rather not a hegemonic, but a geopolitical flashpoint between competing hegemons. Now, what's catalyzing this is quote-unquote de-risking from China, which in all frankness is nothing more than a euphemism for decoupling, except without the negative connotations. As a result of that decoupling, though, or de-risking, what we see in turn is China essentially untangling itself from a global set of institutions aimed at precisely preventing what we're heading towards, which is increased geopolitical confrontation rather than economic integration. It's not a coincidence either that you're seeing that the US treaty allies in the region, Thailand, South Korea, Japan, Australia, and the Philippines, have all increased their defense spending with over the past few years. I think Japan's is now up 171%, South Korea's is up 61%, and the US is the largest exporter of arms to those countries. But it's not just that part of Asia. West Asia, such as Saudi Arabia and Qatar, have also increased their military spending, with the US, particularly in the case of Saudi, as their largest arms exporter. Now, again, I know I'm not going to endorse any specific companies, and I wouldn't mention any specific ones, but in this case, I'm going to, just because it is the quintessential company to unravel this dynamic vis-a-vis defense, which is Lockheed Martin, the world's largest defense contracting company. They have about $160 billion in backlog orders, which seems to indicate a sustained demand for a lot of their technology and aerospace defense solutions. Not only that, their recent prioritization of returning cash to investors shows a strong commitment to shareholder value, which from an investing perspective obviously makes it another potentially compelling investment. But we've also seen increased geopolitical conflict across the world, several major ones to mention, just a few right off the bat. Iraq in 2003, where we saw military stocks pop off before trailing off. We then saw the start of the war between Israel and Hezbollah in 2006. We had the Syrian civil war and the use of chemical gas against Bashar al-Assad's own people, which the president at the time said was a red line, which obviously was a bullish tailwind for defense contracting stocks because of the implication of a red line. And then we saw the invasion of Ukraine in 2022. And then most recently, the October 7 attacks last year, where Hamas attacked Israel. And in a rather morbidly prescient way, the title of my weekly insight that I put out for readers of Pantheon Insights was titled, "Why Geopolitical Risks May Be Bullish for Defense Contracting Companies." The next day, market open, Lockheed Martin was up 11%. Northrop Grumman, I believe, was up 7%. If you look at some of these companies, and again, it's the political secularism that, in my view, is a bullish tailwind, is that Lockheed Martin has, I think, had their share price increase about 800% over the last 20 years. That averages to about 19.09% per year over the last 20 years. For reference, the benchmark S&P has returned about 9.76% over that same period. When you adjust for inflation, it's something closer to 7. What's different now, though, than before is that our relationship with China has become much more outwardly antagonistic. The prospect of war is far more likely, particularly over areas that are very sensitive, such as the South China Sea, as well as the more recent adventurism in the Taiwan Strait. And this is a bipartisan concern because you'll notice, again, that the approach to China between administrations, which on paper seem quite different, at least certainly in terms of their rhetoric, seem to have the same policy towards China And Congress, despite all their bickering, still appears to agree on increasing defense spending. And we see, again, with the example of tariffs, Mr. Biden has maintained them, and he's even added to them, albeit in a far more surgical manner, but we'll get to that during the semiconductor section, which, not entirely by coincidence, is the next thing we're talking about. It's almost as if I planned that. So, with semiconductors, we've all obviously seen the NVIDIA stock price. I think it is now, it has the same market cap as I think all of the shares listed on the Hong Kong Stock Exchange. And I think their market cap now, I believe, is $1.4 trillion. It's an incredible rise. And a report by UBS found that strong short-term demand for their GPU semiconductor chips have been really behind this. We saw with the advent of AI, more specifically, the release of ChatGPT has released a barrage of investments into this area. But more specifically, the capital has been injected into companies like NVIDIA that have positioned themselves optimally to benefit from strong AI spending. So then how has this become geopolitical? Well, China has a military framework called systems confrontation. And without getting too much into it, essentially it is a system, or rather a framework, designed to optimize how to defeat your enemy, not just in the conventional way, meaning let's say direct warfare, but how do you compete with an adversary, not just along the traditional front of conventional warfare, but through cyber warfare, through space, through leveraging your own economic system. In other words, it is a very, very data-heavy framework for defeating your enemies. And what better hardware to use than semiconductors with AI interfacing capabilities that can calculate all the various possibilities about how to optimize ways to defeat your enemy in multiple ways all at once. Naturally, the US sees this concern and has, in response, prompted a series of restrictive measures aimed at limiting China's ability to produce advanced semiconductors with military-facing applications. And this has been dubbed, or at least I like to call it rather appropriately, the Promethean War, because we're seeing really technology be at the center of this. And in my view, given the vast economic and military applications, and we can get into that maybe in the Q&A, of semiconductors and AI, it's no wonder the US has surgically targeted certain chips like NVIDIA's A100s from being exported to China. Now, companies are obviously adapting, but this is where the geopolitics influence it, because 20%, I believe, of NVIDIA's revenue comes from China. Naturally, they are apprehensive about A, not wanting to lose a major market, and two, not also wanting to incur penalties from the US. So they have been obviously adapting. They've been creating new chips and new supply chains along with it to be able to still sell to China without hurting their sales. We saw, however, that even despite some of these announcements, which did have a tangible, quantifiable impact on NVIDIA's share price at the time of the announcement, it hasn't stopped it from continuing to rise. And that's a point I also laid out in one of my weekly insights I put out a few months ago. As far as semiconductors go in Asia, again, another geopolitical and technological flashpoint is it's not a coincidence, I don't think, that shortly after announcing a potential semiconductor plant to be constructed in Vietnam, suddenly, a few days later, we get an announcement, and I believe it was maybe even leaked, that the US is looking to sell advanced fighter jets to Vietnam, a former Cold War adversary, and even at a discount to wean them off comparatively cheaper, albeit less technologically advanced, Russian equipment. And if this sounds like it's coordinated, it's because it likely is. And for that, we have to go back in time a little bit more to the 1960s. I lied, sorry. And then the strategy for the US then, because even though this was the birthplace here in Silicon Valley of the semiconductor, we began to move our operations overseas. More specifically, we moved them to Asia. The reason why we moved them there was twofold. One, it acted as a magnetizing force to pull workers from the rural area who were vulnerable to adhering to communist ideologies, which at the time and still now were a policy priority of the US to prevent, less so now obviously, the Cold War is over. And at the same time, it also gave a pretext for the US to station military bases and hardware out there to protect these vital assets that were necessary for US security. And we're seeing that play out a little bit more now, particularly as China becomes a little bit more belligerent in their actions in the South China Sea, but also regionally. That also explains why we're seeing initiatives like the CHIPS Act and the incentivization for friendshoring, nearshoring, onshoring, whatever kind of shoring you want to use, to essentially bring some of those supply chains back to prevent that vulnerability from turning into a weakness in the event of a military conflict of some kind. And in my view, this is where we see the intersection of two themes, of geopolitics and the potential upside, the potential returns from the potential that semiconductors have in generating revenue for companies, not only for the ones who create it, but the ones who leverage it for their business operations, which for me makes it a very compelling investment vehicle. Because again, where the geopolitical themes and the thematic investment trends intersect is likely where we could generate alpha. With that in mind, the next one I want to move to is quantum computing. Now, with quantum computing, I'm not going to delve too much into the physics of it. I'm not a physicist by training. I saw Oppenheimer twice, but that's not going to save me here. Now, with physics, the main idea is quantum computers leverage the power of the quantum world to increase processing power. Imagine you have a maze. A classic computer would calculate each route individually to then try to figure out, how do I get from point A to point B? How do I get from entry to exit? A quantum computer, through parallel processing and the ability of so-called superposition, the ability to both be and not be a 0 and a 1 simultaneously in various probabilistic states, can calculate all those routes all at once. In other words, quantum computing has this unique ability to leverage, quite frankly, very bizarre properties of quantum mechanics to increase processing power, but for very specific tasks, specifically those that have a lot of variables. One like speeding up for certain problems like search or optimization. Supply chain applications is another example. How do you calculate so many variables all at once to optimize for the proper supply chain, especially in the climate that we're in now geopolitically, which I'll get into a little bit more later. A report from McKinsey to demonstrate the interest that this industry is gathering, because if you want to see where the priorities are, you follow the money. 68% of all startup investments in quantum computing since 2001 have streamed into the industry in the past 2 years. There seems to then clearly be a lot of optimism about the potential applications of quantum computing, not only for its economic applications, but also its geopolitical uses as well. And in my view, much the way that we saw AI-driven euphoria push markets up in H1 of 2023, it's not ridiculous to believe that with sufficient advances in quantum computing, we could see companies with exposure to the quantum computing world have asymmetric gains relative to those that are not. NVIDIA is a great example. It, along with broader equity indices, rose amid all of these developments, but NVIDIA obviously disproportionately benefited from this relative to the benchmark S&P or the NASDAQ for that matter. And this is where geopolitics comes in, because I believe that the US-China rivalry will play a really big part in this. More specifically, again, going back to China's systems confrontation warfare, that requires tremendous computing power at very fast speeds, particularly if you're operating in an environment of war. It's not surprising then, in my view, that we will likely, or not likely, we may see the US restrict access to certain quantum computing hardware, software, or equipment that could help China develop it for their own purposes. But most importantly, the most immediate risk is how quantum computing could erode the safety of modern encryption. An example of that, Google recently had a breakthrough. It's called quantum supremacy, which is basically just saying a quantum computer did something better than a classical computer could. It was a problem that a classical supercomputer even would take thousands of years to solve. A quantum computer did it in 200 seconds. The biggest threat is to cryptography, because a quantum computer could essentially render a lot of these security protocols useless. As a result, obviously there is a lot of government-backed research into this, precisely because of all the political implications it could carry, but also economic, as well as financial. If you're a company, like a really big one, like NVIDIA or JP Morgan or Goldman Sachs, and some of your data is leaked ahead of time of, let's say, a big earnings announcement or anything else, that could inspire a lot of volatility in markets across asset classes and across borders. However, as with any investment vehicle, there are obviously risks. A big one, quantum computing is still in its adolescence. It'll be probably only about another 5 to 10 years or so until we really see mass commercialization. Another factor is cost. It is prohibitively expensive. I think like even a small scale quantum computer costs between $10 to $15 million, and that doesn't include upkeep, which is about $1 to $2 million a year. Some of the equipment is very expensive and very technical, which means you also have a labor shortage because it's not very common that you have a lot of people who studied computer science, engineering, and quantum physics. If you have all three of those skills, you are going to do very, very well in life. But with quantum computers, they have to be held at maintained. The qubits, which are the units of information relative to a byte, have to be supercooled, meaning they have to be near absolute zero. We can never theoretically achieve absolute zero, but it has to be at a very, 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 very cold temperature. There's also a high risk of what's called decoherence, which essentially is when external interference during these very fragile states of superposition, where it is both a 0 and a 1 with varying probabilities for both, can essentially lose its quantum information. In short, what this means is the information that the quantum computer could render would essentially either be inaccurate, or the amount of time that it would take to correct that error would essentially defeat the whole purpose of a quantum computer, which is to increase processing power at a very short amount of time. China is the largest investor, researcher, investor of pushing state-backed capital into quantum computing, and dwarfs the US, the UK, and the EU. But just because you spend more on something, it doesn't necessarily mean you're going to have a lead. The US continues to lead in the world of quantum computing. Examples like Google, Microsoft, and IBM. This is perhaps the investment vehicle which I'm looking, with the longest time horizon on, precisely because there are so many more amendments that need to be made to the technology, not just from a hardware perspective, but from a software perspective. That then leads us to our third theme and our final one, which is energy. More specifically, the energy transition. We saw the passage of the Inflation Reduction Act, which in and of itself is a very impressive piece of legislation, pushing for one thing, for example, is the domestic production of electric battery vehicles, as well as providing tax incentives and various provisions to increase the manufacturing here. However, there is tremendous concern about the potential greenflationary risks of a rapid energy transition. Depending on which framework you use, whether it's the SDS, the Sustainable Development Scenario, or the net zero emission scenario as laid out by the IMF, that will have radically different implications for the prices of key commodities like cobalt, lithium, nickel, and graphite, all of which are necessary to catalyze the energy transition and move away from fossil fuels. In an extreme scenario where you have net zero emissions by 2030, the prices of some of these assets, of some of these commodities, ex copper, would increase not by tens of percents, not by hundreds of percents, but by thousands of percents. So if we thought we would have an inflation problem now, that would be nothing compared to what an uncoordinated and rapid energy transition would have. But if we continue to see government-backed policies induce demand while supply lags, particularly for mining companies that but have to now contend with stricter environmental concerns, higher thresholds for ESG, and local considerations vis-a-vis communities that may inhabit areas where there are large deposits of these key minerals. That'll then elongate the timeline of where supply can meet demand. It takes now on average 10 years, so it's doubled, to set up a mine and have it be fully operational. And that's in a good geopolitical climate. In one where supply chains are being optimized not for necessarily economic efficiency, but geopolitical optimization, that muddies the picture even further. And this is where mining companies can benefit quite well, because on the gap between the inelastic supply in the short term and the high government-induced demand in the short term is where you may see a price premium for these key commodities that would then translate theoretically to higher profit margins for some of these mining companies that are optimally positioned for the energy transition. We also see how a lot of these commodities are also concentrated. So we have concentrated resources, concentrated geopolitics and narrow resources. What I mean by that, cobalt, which is essential not only for lithium-ion batteries, but also some parts of our iPhone, 70% of it is located in the Congo. When it comes to lithium, Argentina, Bolivia, and I believe it's Chile hold 58% of all lithium reserves. There's even been a discussion about forming a lithium cartel, so to speak. But the reason why I'm not particularly worried about that is because that region has a history of political volatility, not from as a result of foreign interference, at least not in the past few decades, but rather domestically. They oscillate violently between far left and far right administrations that frequently contradict or undo a lot of the frameworks that their predecessors had wanted to implement. Great example is look at the elections in Brazil most recently, as well as the ones in Argentina. We see rapid changes between those two administrations and their overall philosophy. So in short, just to wrap up the energy section bit, and then we can just wrap up with a conclusion. I'd love to answer any questions anybody has. What we see here, again, is another convergence of thematic risks, meaning the energy transition, and government-induced policy and incentives there, and geopolitical risks that could potentially amplify it. The US's ABC, anything but China policy, stipulates that if you want to receive, let's say, tax credits in the US, vis-a-vis the Inflation Reduction Act, a lot of your supply chains can't touch Chinese supply chains when it comes to processing and exporting rare earth minerals. Domesticating that process is also going to take a long time. With semiconductors, if we wanted to domesticate, for instance, every aspect of the supply chain with semiconductors in the US, it would take 10 years and cost $1 trillion. An example, ultraviolet lithography, which is essentially used to print light onto these semiconductors. The company ASML has a monopoly on these machines. It is the most expensive mass-produced machine in history at over 300 million euros per machine with over 100,000 individual parts. How does this relate to energy? It's because it's the same underlying principle that geopolitical risks are both interfering and amplifying potential gains in these industries. To wrap up, in my view, I think that thematic investment trends and the intersection with geopolitics will continue to drive a lot of upside gains and volatility in the areas of technology, defense, and the energy sector, especially when it comes to the energy transition. That's all I have for today. I'm happy to take any questions if you have any.
I got a question. So you mentioned quantum computing being a big kind of macro trend, and you mentioned Google, Microsoft, IBM as some of the leaders in the space. Are there any non-public companies that are kind of interesting to you in the quantum computing space?
Non-public. So not that I'm aware of, no.
Or smaller public?
Yeah, smaller, yeah, sure. So for that, there's a very interesting ETF that I'm actually looking at. The abbreviation is QTUM, QTUM, which has, it's highly diversified, meaning that there's the greatest single weight, I think, for one of those companies is only, I think, 1.3%, which should give you an idea about how diversified they are. They have about $200 million of assets under management, so they are growing. Obviously, it's not as big as some of the more passive index funds we're seeing, but it has a whole list of companies in there: IonQ, Marvel Technology, I think Honeywell is another one, and other companies that are either directly or indirectly exposed to quantum computing. Would you have a...
I have a question. What do you think of Bitcoin's part in the global market in the future? It seems that it's becoming, I guess, more mainstream than it was 2017. And now, I guess, what do you think of Bitcoin's part in the future?
That's a great question. Well, for one thing, I don't think it's ever going to be a world reserve currency. I have this little game that I like to play with people, where when they say it's going to be, when I come across them, I say, okay, it's interesting. So what's your plan? They say, well, I'm going to hold it. And I say, okay, until when? They say, well, until I want to cash out. And I say, what? And they say, in dollars. And I say, thank you for proving my point. Because the whole point, and here's my view. In terms of its ability to become a currency that you use, like let's say as a medium of exchange, is predicated on what I call the primary and secondary function, right? So the US dollar, its primary, or the euro, their primary functions are as a stable medium of exchange. Their secondary function is as a speculative asset. Bitcoin is reversed. Its primary function is a speculative asset. Its secondary function is one as a currency, precisely because there's so much volatility still. Even though the rate of transactions have increased, Visa still is able to dwarf that, because I believe they have like 7 million transactions. It's something per second. It's some ridiculously high number. As for what it holds for the future, I mean, we are seeing more institutional adoption. We are seeing the issuance of Bitcoin ETFs that are seeing massive inflows. How that all works, I'm not really quite clear on. I think the reason why I think the price of Bitcoin may rise and its role in the future may become more relevant is because it has a legacy effect. People will just see the price increasing, its appeal will grow. And even if we have other more advanced and more, let's say, multi-use cryptocurrencies like Ethereum, where you have smart contracts, Bitcoin will command the legacy premium, and it'll attract a lot of capital that way. And as its base threshold continues to rise year by year or decade by decade, it only serves to reinforce that underlying bullish narrative. So in terms of its role in the future, Larry Fink has called it digital gold. I mean, it is a scarce asset, and many Bitcoin are lost more per year in wallets. Either people forget their keys or they're stolen, or a combination of the two. So in terms of role in the future, I think it will be a store of wealth to a degree. The problem is that it's still very volatile and highly speculative. So at one point then, when people cash out in it, because they will likely cash out in it, what will then happen to the price if you see a mass outflow of capital? But for me, I don't view that as a headline risk, at least in the near term. I looked at Bitcoin peripherally. I should know I don't look at it as a primary asset, but I do find it interesting from that perspective.
Awesome. Also, recently Sam Altman came out saying that he might raise up to $7 trillion to expand semi-manufacturing. Can you comment on the 7 trillion number? And did that surprise you, how much money he's actually trying to raise?
Yeah, I mean, I saw that figure, and FinTwit was all over it with the memes, so I definitely appreciated that. I don't know the details of it, but if he is talking about reforming the entire supply chain for not just semiconductors, but highly advanced ones, like the US, for instance, is going to start, I think we're going to start actually mass producing, not the US, but I think it's Taiwan, mass producing 2 nanometer chips by, I think, as early as next year. If you want to redo the entire global supply chain for that, especially for the more advanced equipment where a change in atmospheric pressure can influence how the equipment works, you're going to need a lot of capital. I think the funding environment now is tough, obviously, where interest rates are quite high. Currently, the Fed, especially with the latest CPI report, people are thinking, okay, maybe we won't be getting that rate cut soon. In terms of the cost, that doesn't surprise me because, again, a lot of this equipment, buying it in and of itself is very difficult and expensive. ASML's machines that I was talking about earlier are just one example of that. But if you want to redo everything or redo a large part of it, especially with highly advanced, highly technical equipment, you're going to need a large check. And as far as I know, I think he has, SoftBank or a Dubai-based fund that are looking to invest. I don't know how much capital they've committed, but that doesn't surprise me that it's such a high number, just considering how expensive everything is in the semiconductor industry.
I mean, it definitely makes me think more about NVIDIA and AMD and kind of what they're doing. That's super interesting. Can you also comment a little bit more on kind of the energy transition, kind of some of the macro things that are happening there?
Yeah, sure. So we know, for instance, that it's going to be very resource heavy. An electric battery vehicle has 15 to 20% more resources than a conventional vehicle, than like a ICE, an internal combustion engine. And in terms of the macro trends, because I think it has so many security implications, like redoing the energy transition in and of itself is difficult, right? Because we've been using oil for 50 plus years, essentially. Not only have we created a domestic system for not only producing oil, but leveraging it into our system to maintain our industrial output, an entire global economy has been shaped around oil. Without oil, we come to a hard stop. So if you're talking about reforming that entire system, especially over such a short period of time, that presents a lot of upside risks to inflation, or what I called earlier greenflation. I can't take credit for that term, unfortunately. And I think that's where mining companies could be well positioned. Because again, if governments want to stimulate this demand, they want to hit those climate agreements, they want to hit those targets in order to then have political but also economic clout, that may cause a surge in prices. Now, where it gets even more difficult is if you have, again, a geopolitical climate that's not conducive for cross-regional integration, but that's only regional, right? We're seeing a lot of separation between how the US does business with China and the rest of the world through this kind of economic encirclement, essentially, that excludes China and then takes away their geoeconomic leverage. The problem with that is that China has a near monopoly, essentially, on processing rare earth minerals and metals and other resources that are required for this energy transition. To give you an example, China, although it didn't have a big impact on markets, recently restricted some exports of germanium and gallium, both of which are necessary inputs to be used to make semiconductors. Now, as for the broader energy transition, I would say, that the inflationary risks are being amplified by geopolitics, and that I think there may be, in general, a misunderstanding about how difficult this is going to be. Like when people say, okay, I bought a Tesla, and don't make me wrong, they're a great car. You say, don't buy oil, I'm saving money, I'm not, purchasing gas. It's like, okay, but what do you plug into? Oh, well, I plug into the grid. Okay, what's that grid powered by? Primarily still fossil fuels. So again, to move away from this energy transition, a study by Wood Mackenzie found that I think it would cost $4.6 trillion and 10 years to essentially make the entire US grid net zero. So I think people are still underestimating the costs to this, and that moving too rapidly could actually backfire and make people think, maybe this just isn't worth it because of how much macroeconomic instability it's creating, as well as the potential social unrest that would follow, particularly now that we're still dealing with bringing down inflation. That I would say is like my longer term or big outlook on some of the dynamics of the energy transition. Great. Thank you very much.